For you all who watch these videos, I'm often trying to find ETFs that might compete with SCHD. And so this ETF we're talking about today not only has beaten SCHD by, well, a lot over the past 5 years and 3 years in a total return scenario, but it also has a decent dividend yield. It can potentially compete with SCHD's dividend. However, like most ETFs, when I try to compare it to SCHD, there is somewhat of a problem. I'll explain. Today we'll be comparing FDVV to SCHD, the methodology and the factors that can be seen in both of these ETFs. We're going to go through my ranking process that I created, how I rank ETFs. Now, because I've created my own ranking process, you will see a winner based on how I rank ETFs. Then I'm going to show you my free web app and how you can run what I did with my ranking process in this web app with just a few buttons. And finally, we're going to just answer, can FDVV compete with SCHD? Now, when comparing two different ETFs side by side, we got to look at the methodology. If we understand this, we're going to be able to make a better determination for each of us ourselves if this is going to be worth investing in. So with FDVV, we're going to go over that one first. So what happens is it takes the Fidelity US Core Index, and that's going to be like 750 to 800 different stocks. It's going to take stocks that must have paid dividends over the past 12 months. Now this part you're going to want to pay attention to because when we go over SCHD, remember this is 12 months, and we'll go over SCHD next. Then next, it must have a forward yield of over 1%. So those are like the two, let's say, dividend metrics that need to go through these 750 to 800 stocks first. After that, it takes things like REITs, MLPs, ADRs, and firms with negative earnings, so that's good if you don't want to invest in companies that don't make money. It takes all of those companies out. Then it calculates a dividend score, and this dividend score, it uses dividend yield, payout ratio, dividend growth, and free cash flow. These are all important metrics if you're a dividend investor. So these can help you hopefully find companies that do have attractive dividends. And maybe they're not paying too much because we're using things like payout ratio and free cash flow, because we don't want companies that pay too much dividends that might end up hurting their long-term growth or their capital appreciation potential. But then if you're a dividend investor, of course, you want companies that will pay you a decent dividend. Now this next part, this is the part that I think is really interesting about the ETF. I really kind of like this. And by the way, there are of course some more steps here. I'm not going through every single step in detail, but this is a good summary, I think. So going back to that step 4 where we get the dividend score, well, after the dividend score, what it does is it actually groups every single sector. And so it segregates all of these different stocks into the 11 different sectors. It adjusts the size, which I think is good because now you don't have only these mega cap companies that are just like taking control of your portfolio in an ETF. It's actually going to adjust the size to kind of make them more apples to apples when it goes through these other parts, which is ranking it by the adjusted size based on the dividend score. And then after it ranks these stocks that are now adjusted for size, it says how many stocks are inside each sector. So if there's more than 100 stocks in the sector, you're going to take the top 10% of those stocks. If there's less than 100, so 25 to 100, it's going to take 20% of the stocks. And then if it's less than 25, it's going to take 35% of the stocks. Then finally, you're going to get this portfolio of FDVV, which is 100 to 150 different stocks. So I think the way that this uses sectors and adjusts the size and then ranks, I think that's interesting. It's like saying, let's take the best of the best in each of these sectors, instead of kind of going like top down. So next up, okay, let's talk about SCHD's methodology. We fit this one actually into one little screen, so that's good. So first off, we have the Dow Jones Broad Market Index, 2,500 stocks approximately is what you're going to start with. Then you're going to go remove REITs, so real estate investment trusts. Those are going to get taken out. Then you're going to define the universe. So what it does is it takes 10-year consecutive dividend payments. I told you to remember that part about FDVV having a 1-year dividend payment. So this is 10 years, much longer. So obviously, this is a stricter portfolio methodology for finding stocks that pay consecutive dividends. Then you have the size, so 500 million in market cap. Smaller companies can get into this ETF. So of course, you could have companies that are $1 billion, $2 billion. They don't have to be companies that are hundreds of billions of dollars. And then you have just the trading volume. So they can't be too thinly traded. Then you have 450 stocks approximately that fit these criteria. And from there, you're gonna then rank it based on some fundamentals. So we have free cash flow to debt, we have the dividend yield, we have the return on equity, and we have the 5-year dividend growth rate. After you go through that scoring system, you're then gonna have 100 stocks that go into the portfolio of SCHD. Some of the differences here. SCHD, stricter 10-year dividend payment versus just a 1-year consecutive dividend payment. On the other hand, FDVV does use things like payout ratio, which SCHD doesn't use, but SCHD does have a bunch of quality fundamental things here. So what you end up getting are portfolios that are weirdly kind of similar in terms of factors. Now I realize I haven't been doing you justice on this channel because I don't talk about factors enough, and they're important. In the future, we'll talk more about factors. But what I want to see here are how the factors look for these ETFs. So this is FDVV. We have, I'm just going to show you here, we have the style, which is the growth and value. We have yield, which is higher low yield. We have momentum, which is higher low. Quality, which is higher low. Volatility, which is higher low. Liquidity, higher low. Size, larger or smaller companies. And so we can actually cycle through this and kind of look at how it moves. This is SCHD, and it's very similar. I'll go back to FDVV, right? SCHD. It doesn't move around that much, okay? And then finally, we can just kind of look at this overlaid and really see what's going on. The blue circles are where SCHD sits and the gray ones are where FDVV sits. This is from Morningstar, by the way. And what you'll see honestly is in terms of the style, it's value. They're both value. Now, SCHD is slightly more value oriented. It's like super low on the value scale, but FDVV is considered 100%. It's a value style fund. In terms of yield, which we're going to talk about in a minute, they're similar. In terms of momentum, SCHD is a lot lower of a momentum score than FDVV currently. However, SCHD, and this is interesting, if we look here, the kind of lighter gray part here showing SCHD will move around quite a lot between whether or not it has momentum stocks and if it does not have momentum stocks. So up here, you'll see there have been times over the past 5 years where it's had a lot of momentum. And now we're in a time where there's like no momentum. In terms of quality, you'll see actually we're kind of getting towards the lower part of the scale also for SCHD in terms of quality, where it's also had higher quality in the past. And again, if we go overlay this, the quality of companies, according to Morningstar at least, FDVV's quality is a bit better than SCHD's. This is not to say that there are low quality stocks inside SCHD or FDVV. This is just what Morningstar uses, what their calculations are to figure out a quality score for different batches of stocks. And they don't consider this to be like the highest of the quality stocks. So it wouldn't get that factor if you're looking at a factor model. Then you got things like volatility. So these are lower volatility ETFs. They're both moderately liquid funds, and then you have size. And for size, as you can see, SCHD is gonna have slightly smaller companies, maybe some more mid-cap tilted kind of ETF. FDVV is a slightly more, let's say, larger cap. And then what we wanna do here is we wanna look at all the specific little important pieces of information to figure out, we're gonna start with the expense ratio of 0.06%, which is the expense ratio of SCHD, compared to 0.16%, the expense ratio of FDVV. So yes, FDVV slightly more expensive than SCHD. I wouldn't categorize it as a really expensive ETF though. If it's under 0.2%, 20 basis points, to me, not very expensive. I'd be fine with it personally. Then you have yield. This is one of the most important parts for a lot of people watching this video, probably 3.08% yield for FDVV. So it does have a lower yield than SCHD, which is 3.83% for SCHD. So getting above a 3% yield, so it's comparable to SCHD in terms of yield. Now how about in terms of risk? So we're gonna talk about max drawdown, we're gonna talk about the volatility. So max drawdown being, once it hits a peak and then it gets down to a trough, like how far down did that thing fall? It could be over any time period. It could be over like a 1 month period, it could be like a 3-day period, or it could be like a 3-year period. It's just once it hits a peak, down to a trough, how long does it take? Or rather, how much drawdown was what we're talking about in this one. How much is the drawdown? So the drawdown for SCHD from September 15, 2016 till today was negative 33%. So you felt some pain, of course, and this is during that COVID crash, I'm sure, but you felt pain holding SCHD. There's no doubt about it. Losing 33% of your portfolio doesn't feel good for most people. But if you have FDVV, you actually lost 40%. So quite a bit more. A lot of ETFs that we've run on this channel, they're like dividend type of ETFs, and even not dividend ETFs, if it's like S&P 500 ETFs, they didn't get to that 40% drawdown over that period. So this is a decent fall, something to keep in mind. But then you have volatility, which is kind of interesting. The volatility on FDVV is 13.74%, and it's less than SCHD's, which is 14%. So the max drawdown was more for FDVV, but then it's a bit less volatile than SCHD in general. But this now brings us to one of my issues with FDVV, and it's the stability of the dividend. So I have this thing called the dividend stability score that I use. I want to know how stable a dividend is for a ETF, and FDVV's, it's not very good. It's 32.4 dividend stability score when SCHD has a 70.6 dividend stability score. If you're a dividend investor, if you rely on dividends, if that's very important to you, if that's the reason you're investing in a certain ETF, well, you should know that the dividend stability score for FDVV is not anywhere near SCHD's. Now, maybe you don't really care that much. Maybe you're not living on the dividends. Maybe you don't distribute the money out of your account. Maybe you don't care that much. You're just reinvesting it. Whatever it is, take your own unique needs for yourself and make a determination. Does this matter to you? I'm just here to deliver some information for you. Next, diversification or holdings. So how many holdings are in these? SCHD 103, 120 for FDVV. Size, or how many assets under management are there? Look, FDVV is not a very big ETF. It's fairly new. I think it's growing a lot more recently because it's been doing well. It's getting more attention. But $7.1 billion inside this thing, where SCHD's got 10x that much, almost $70 billion. Returns, big part, right? This is a huge part for a lot of people. We're going to talk about the 3-year, 5-year, 10-year. SCHD's 3-year annual rate of return is 8.24%. How does that compare with FDVV? 20.78% for FDVV. It just killed it. So I don't know, finding an ETF that pays a dividend that's more than 3%, but still has 20% rates of return over 3 years, I mean, that's impressive. You gotta say it's impressive. Over 5 years, 10.57%, FDVV, 18.23%. It's just, the rate of return on this compared to SCHD it's just looked good. It looks great. You gotta just admit that it looks great. Even if you're an SCHD fanboy, fangirl, it looks good. Then the 10-year rate of return is 11.11% for SCHD, but we don't have one for FDVV because FDVV is not old enough to have a 10-year return yet. And so that's one of the things, it's 9 years old. It's not like a super young fund, but doesn't have that 10-year return yet. So let's move on from the returns, tell you about my rankings, and then we're gonna go over my web app. This is how I would rank someone who's like an income investor. So you'll see this red column here. This red column changes based on the type of investor or the type of lens I'm looking through here. So if I'm looking through a growth lens, this looks different than an income. So we see an expense ratio first off. 5% of my score is based on expense ratio, then yield. And let's just go over the most important ones here. So yield, of course, is 35% of the score. That's the most important. Stability is 25% of the score. So it's a very important part, that stability part I mentioned, of my scoring system. And you'll see SCHD is a 71.1 as the score, and then FDVV has a 51.6. Now, let me show you what this looks like inside my web app. What you do first with ETF Compare, you decide the lens you want to look through. So we're going to go with an income type of investor. We're going to type in the tickers. So we have SCHD, comma, FDVV. I'll hit enter, and then I'm going to hit this compare button. It's going to do all its things, and everything I just went over, it basically just calculates it with a few button clicks that I just did, and now it gives us a ranking. What's interesting about this ranking, and what I've kind of put in place here, is that if it doesn't meet certain criteria, it can't actually give you a answer, or it can't actually rank an ETF. Because I don't want people comparing ETFs that probably shouldn't be compared against each other, that don't even meet a certain requirement of being an income investor. So what you see here is that FDVV is not ranked. And the reason it's not ranked is because it doesn't pass the stability score. The stability score, which is 32% here, it needs to be over 55%, as you can see here, to actually be eligible to be ranked. It's just my thought is that people who are interested in income investing, they want to see ETFs that have a stable dividend. If you don't care about that, well, then don't worry. Make your judgment based on how you feel about this apart. But if personally you don't care about stability, then maybe this is still a decent ETF for you. Now remember, my score earlier, stability is 25% of the score. So you with your unique needs, you decide. Now I will show you some interesting things down here. Now I didn't get to go over the growth of $10,000, so I'll just show you real quick. Now you could see SCHD's growth of $10,000 over 3 years, just over 12,000. FDVV is 17,000 over 5 years, 16,000 over 5 years, 23,000. And since inception, which we can see now, this is 9 years old, so $30,000 in the past 9 years. If you want to compare that SCHD in the past 10 years, of course it's 1 year longer, but still more return than SCHD over 10 years. You can then go down here and you can take a look at all the different metrics, compare them to each other, everything we kind of went over just now. And so at the end of the day, my synopsis is that SCHD currently still is a better ETF for someone who cares about income investing because of that stable dividend. I will tell you, I'm not an income investor. I'm a total return type of guy. I care about return. My main goal is to just beat the S&P 500 every year. That's what I care about. I don't really care about how much yield I get. I don't care how stable the yield is. In fact, I probably wouldn't necessarily invest in these unless I wanted to invest in one of those factors, because I would invest more of a factor-based type of investing style for myself. I hope the things that I've given you today help you make your decision. You want to try ETF Compare, take a look in the description below. And if you are interested in more factor investing, well, I have a video right here that falls into the momentum factor category. I want to take a look.